Hit it.
It's Friday, February 26, 2021, episode 120. I'm Patrick Ceresna.
And I'm Kevin Muir. This week it's our pleasure to... I wrote this wrong and I'm like Ron Burgundy.
Leave that in there, Lena.
That's fine.
Why do you get...
I don't mind. That's fine. You can leave it in. Let's go. This week it's our pleasure to welcome to the show trading legend Jim Leitner. We talk about his career, his investment philosophy, and the best trade of his life.
And then in This Week in Trading History, we'll look back at the Legal Tender Act of 1862, and we end with our segments of No Stupid Questions and Skin in the Game. And folks, well, we might even drink some beers along the way, so stick around. We've got a great show. Lena, hop on.
Hello.
What are we drinking this week?
So
How you doing?
Good. So today we're drinking Junction Craft Brewery's Junction Craft Pilsner.
And we're all drinking it. Patrick's
Yes.
back home, so we all got the same.
Finally, we're all drinking the same beer. Brewed in the traditional German style, this Pilsner is a light golden color. You'll find notes of crusty bread and slight herbal flavors with mild bitterness and a quick, dry finish. Uber refreshing.
Did you say
They're
crusty
not-
bread?
Yes.
That's exactly... Now that gets me excited. No pineapples, nothing, crusty bread. And you know what? I don't know if it's the fact that I threw it in my freezer because it wasn't cold. It's outstanding.
It's delicious.
And I hate to break it to you guys. You probably don't realize, but this is the second time we featured this beer on the show.
Yes.
We've already did. This
People
craft
can
beer
go
before.
back and see if I change my rating.
That's right. That's what we'll have to check out.
And if they do, if it does, it's going to definitely have something to do about putting it in the freezer before it's ready to go.
All right.
Okay.
Kev, give us a disclaimer.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include ramping resuscitation, the flaccid futures, or Elon eruptions. By the way, we're running low. Christine, you sent us a whole bunch. We need some more. Or anyone else.
All right. All right. Let's get to our interview. Okay, we are now pleased to welcome to the show Jim Leitner from Falcon Management. Welcome, Jim.
Hey, nice to meet you guys.
Jim, it's Kevin here. I've been looking forward to this this interview for so long. I can't tell you how, but before I kind of jump into it and talk to you and ask you about your life, I want to tell the story about how we met. And way back when I was writing The Macro Tourist, I wrote a piece. Well, I still write it, but I was writing it for free, and I sent it out. And I wrote this piece called My Jim Leitner Moment. And I wasn't trying to compare myself to Jim Leitner, but I was talking about the fact that I was thinking about a piece in your book. You were interviewed in this book called The House of Money by Steve Drobny. And in that book, you explained how you were serious about cutting risk. And you were done this interest rate trade, and one of the things was that you wanted to buy a call option at 0% yield. And this was way, way before anyone had ever traded at negative rates, before anyone had ever even thought about this. And you had gone and actually asked somebody to price it out. And I wrote this thing because to me, this was one of the smartest and most out-of-the-box thinking that I had ever had. And so I wrote this piece, and it was called My Jim Leitner Moment, and I kind of compared myself to thinking out of the box like you did. And sure enough, you know, I go look on my inbox, and I have all these things, and then I'll see one from Jim Leitner. And I go, and my heart starts beating. I'm like, Jesus, well, you know, is he going to be mad at me for making, for comparing myself to him? And you reached out, and you were very kind, and we've been chatting ever since. And I just want to thank you. It's been a pleasure getting to know you, and I've been looking forward to this.
Well, it's actually a pleasure. It's mutual. I love what you're writing. I so enjoy reading it. It is out of the box. I think it's practical. I love how practical it is. You know, not just about trade structure, etc. But what I love about your approach is how humble you are. That really, in life, what matters is the results. You know, you're trying to make money, and you're not trying to be right. You're trying to figure out what is the market going to do? How should I be structured? And you did do a brilliant. I really love the way you write that macro tourist piece.
Well, that's very kind of you. Although I suspect you're like the rest of them, just saying you're subscribing for the articles. We all know you're just subscribing for the pictures. So let's jump in and let's talk. Let's talk a little bit about you. So You run your own shop now, but you have a long, storied career on Wall Street. Why don't you take us from the beginning and walk us through your career a little?
Whoa. Well, beginning is really kind of way international. I grew up with my grandfather in Turkey. I spent from age 5 to age 11 living in Turkey with a grandfather and a bunch of aunts and uncles.
Wow.
And you can imagine what that was like. This was 1957, 58 to 1965. No internet, no phone, no one knows where you are. It was great. It was just the best way to grow up for a kid. You had a stack of books, you ran around town, you had Turkish and Greek friends. And then I ended up moving from there to Germany with my grandfather. My grandfather was Austrian. My great-grandparents had gone to Turkey as missionaries.
Oh.
And the other side, my grandmother's side, went there to build the Sultan's first flushing toilet. So
Wow.
I had deep roots in Turkey. It was great. And I went to Germany afterwards. So from 11 to 18, then my dad says, look, you have an American passport. You're born in America. Why don't you go to college in America? So I came back to America and loved it. It was just so free. The education was open. You could take whatever courses you wanted. You didn't have to just decide beforehand that you're going to study XYZ, engineering or medicine. You just did this bachelor's, you took courses. You like to take them. And I studied economics because, I listened to my dad who said, you need to have a job someday. But I really hated it. I just didn't enjoy it. I thought it was totally useless the way it just didn't mean anything to me. But I stumbled into a Russian history course. So I started taking courses on things that had to do with Russia. I took Russian language, Russian literature, Russian history, Russian economics, a course on the Russian monetary system. It was just super interesting to me. And from there, I went to Columbia and I got a master's in international finance. And one day, I had no money, so I was living on student loans. I was typing for the dean for a
for extra dollars on the side,
$3 an hour. And I said to myself, I can do better than that. And I bought the Wall Street Journal on a Tuesday when they had a job mart. And there was a job advertised for money broker trainee wanted, P.O. Box 101 in Church Street Station. And I sent a letter in saying, I'm a student, so I can only work half a day, but in half a day, I'll do the work for anybody else that would take a whole day.
Right.
Couldn't find a better trainee than me. And I got a call back. I went down there. I became a broker from 7 to 12 in the morning and finished my MA from Columbia in the afternoons. And being a broker, you don't really know why you're executing. Banks tell you, I'm trying to do this, I'm trying to do that. And as I got to be a little bit more senior, after 2-3 years, I had the JP Morgan line.
Okay.
Especially for foreign currency deposits. And I went in to call them one day and I said, look, next time you guys need a trainee, will you hire me? I just want to learn. I just am not happy being a broker. I just like to know, what are you doing? Why are you borrowing money, lending money, selling things? And 2 weeks later, I was a trainee on the kind of like asset liability desk.
Okay.
And that worked well. I had fun. And then I said, I've never learned trading currencies. And they brought in this new chief dealer from JP Morgan Zurich who spoke obviously German. I walked over to him the first day he was there. I said, look, if you hire me as a trainee and let me come and sit next to you, I'll get you coffee every morning. I'll write you tickets. That's how I learned trading. And I was at JP Morgan for 3 years. And then every 3 years, I'd go to a different bank. Right. I figured, in 3 years, you basically learn what you had to learn, and you'll meet somebody else. You'll do a different kind of product. I went to Bank of America, became a chief dealer in Bank of America, New York. I went to Shearson Lehman Brothers, traded commodities. And then I ended up at Bankers Trust, which was like a trading powerhouse.
Right.
And
That was in the heyday of Bankers Trust when they were
86 to 91. We were
the go-to firm, right? Of Bankers.
That is it. Yeah, we were the biggest. I mean,
Yeah.
we really had enormous credit lines, enormous risk limits, and I had a great first year. Bank said, look, if you can do this with like 5 people working for you, you should go to London and run all our European businesses. And so I did.
So you took off to London. And so were you trading fixed income currency or everything like derivatives?
I was trading basically minor currencies and positioning stuff and just having a good time. I had 5 people doing the forward books, the interest differential books. So you had to know about interest rates, and you could do some bonds to hedge yourself. It was kind of like jack of all trades.
Right. And at the time, sorry to interrupt, but at the time, was Bankers Trust responding to clients, meaning selling products that, or were you actually the start of a proprietary trading firm?
Oh, we were definitely the start of a proprietary trading firm.
So you're just winging it, just slinging it around. Oh,
yeah, definitely in large size. And we did a good job trying to figure out, for example, how do you hire good traders? What would make somebody a good trader? We hired the U.S. backgammon champion just to think, well, this person is good at making decisions under, kind of controlled gaming situations. Didn't work out that well. We hired one of the world speed chess champions. He was okay. Didn't make tons of money either.
So what do you think the problem was? Why do you think that those people that had what on paper seems to be an ideal kind of disposition for trading, why they couldn't do it?
I think paper is different from equanimity. You need to be able to sit back and just be relaxed. And one thing I was always good about was not getting too upset about losses or profits. I do it. I have a good time. I enjoy the markets. I mean, I think really the thing that determines a good investor or trader is somebody who is curious. Okay. Like if you're curious about the world, you'll think about, whoa, why is this happening? Or where's something interesting happening? Or what's a new product that I can learn about? Or you're making a new connection with somebody that you've never met before and you're learning from them about their markets. I think that's what really makes good traders, curiosity.
And so did you finally figure out how to pick traders over the time?
Nope, we never did. We never did. I mean, it just randomly would happen. We try to hire smart kids, and eventually some of them would work out better than others, and the others would just kind of like move on and become salespeople.
Right.
Or go off and do something different.
And so you're Bankers Trust during the heyday, and eventually Bankers Trust runs into some problems, right?
I wasn't there anymore. I just left.
Oh, you were gone before the problems.
I was gone before they did all the dumb things that they did where they sold derivatives to people, marking them up ridiculously, blah, blah, blah. No, I left in 91 because I realized that I didn't enjoy managing 250 people.
Okay.
Running the European businesses was really running a business. You spent a lot of time on human resources. I remember a guy breaking down and crying when I gave him his bonus. It was not big enough. I'm like, do I really have to deal with this? I'd much rather, think about, should I be long Italian liras or not? And what's going on in the Swedish kroner? And
right.
I had also told the bank that I felt the amount of risk they were taking would eventually blow up on them. Not because they would necessarily take a large loss, but because at some point, central banks would be nervous about it, that you could take a large loss.
Oh, because you're a bank in a regulated institution that they're basically the central banks are underwriting them.
At some point, something might happen, and that's eventually we ended up with Volcker rules, right? But this was way later than 91. So at that time, I started talking to customers about doing trades for them and started building a customer book. And a bunch of customers said to me, look, if you ever quit the bank, just talk to us. So in 91, I quit and started Falcon. And I had 4 customers
right.
who didn't give me any cash. I didn't want to have to deal with the issue of actually holding assets. I would just call them and say, look, I like this trade. And they eventually just gave me trading authorization on their account. And I traded and basically was able to retire in 94.
Wow.
It was great. I had a great 93. And from then on, I basically had a family office. It took me a couple of years to set it up. And I've over the years done more and more. So at the banks, I never had done equities, for example.
Right. Okay.
Because, it was regulated. There was Glass-Steagall Act. But obviously, you can't run your family office. You can't be investing your own money unless you can think about equities. So in 1991, 92, I started investing in Russia.
Oh.
What happened was that, Russia fell apart into its constituent republics. It became 10 countries.
Okay.
And I was just flabbergasted by the lack of violence, that this could happen without a real civil war, that the army wouldn't just say, no, we're holding you together, that there was no elite that just said, nope, we're not letting this happen. It just was, there was no blood in the street. It just happened peacefully. And I said, this is just the most amazing thing in the world. I got to go there. So I went, I visited, I found the people just incredibly excited about the prospects of democracy. And I said, you know what? I want to invest in that country. So I started buying equities because you couldn't buy the currency. I mean, what were you going to do? Own some rubles? That didn't make any sense. Bonds didn't make any sense. I know I'm going to learn about equities. And I learned about equities by buying Russian stocks when there basically weren't any yet.
Right. And it was at the time when at one point they gave a little bit of the Russian stocks to each per person.
Yes.
And then people would try to, get them all together and sell them as a block, and you could buy it. Was it during that time you were doing this?
Yes, exactly. Actually, they had vouchers. They give all the people in Russia vouchers, and then those vouchers could be handed in at auctions as the state was privatizing everything. Since they owned everything, the state would privatize it, and you'd go to the auction, you'd say, oh, here's 100 vouchers for this block of shares. And if you won the auction, then you own shares.
And so were you actually going in and participating in those auctions? Like, was that your foray into equities? That was your first equity trade?
That's how I learned. So I participated in the auctions. I hired a Russian lawyer who would go to the auctions for me. And something special happened about I don't know exactly when, 94 probably, where there was an auction for a big block of shares of Kaliningrad Neftegaz, which was the oil company in Kaliningrad.
Okay.
And I thought, there was always a minimum bid, and it was like nothing.
Right.
It was really nothing. So we said to our lawyer, you go and you put in the minimum bid and see what happens. And there was a snowstorm. So our lawyer made it there the day before. He goes to the auction. He's the only guy. We put in the minimum bid, we win the auction.
For the whole company.
Like 13% of this oil company in Kaliningrad. The next day, the representative of Luke Oil shows up and says, wait, that was not right. Because, I couldn't make it because of the snowstorm.
Right.
This is our business. I mean, we're Luke Oil. You want to buy this Kaliningrad, more Neftegaz block. And we said, well, really sorry, but, we won it, so we own it. You talk to the auction regulators, and the city or municipal government there said basically, no, the auction was fine, you own it. And then they took us to court, and our lawyer argued that, well, they weren't there.
Yeah.
And we won the court case. And that turned me into a real believer for the next 2-3 years, where if some foreigner could win a case against Luke Oil, when it was clear that shouldn't, that showed me that
it's not as corrupt as they're saying, and there's actually a rule of law, and it's going along.
was amazing.
And were you ever scared? Like you read that book, the whatever it is,
The Red October or whatever it's called.
And he implies that there's all sorts of intimidation tactics and physical threats on his life. Did you ever feel any of those or no?
Nothing bad like that ever happened to us. And we actually then turned around next week and just called Luke Oil and said, look, we want a good relationship with you. Why don't you just buy them from us instead of buying them in the auction?
Right.
Just pay us a markup. Because,
so you showed him an offering. You were a good guy. You showed him an offering.
We didn't try to make a huge amount of money on it. And it all worked out fine. And it made me feel very positive about what was going on in those years in the country.
Right.
So I put some money into that, and by 1996, the market was up tenfold. And I sold it. I said, I've got to be humble. I don't know anything. I mean, anything that goes up tenfold, I should at least do something about it. And, then we had 1998 when Russia defaulted on its domestic GKO market, which was like their treasury market. And then we had LTCM.
Right.
The market came down 95%. So in 99, I did the same thing. I started buying again.
You did it again. You went back to Russia and bought all the companies.
Yeah, I went right back in 99 and then sold them out when it was up tenfold by 2002.
That's amazing. Okay, so let's talk about the long-term capital a little bit. Like, apart from picking off cheap Russian equities, what else did you experience during that time? Like, how did the rest of your portfolio perform? Were you involved in any of those trades that they were doing, or do you take a different enough approach, and were you actually, because of your strict kind of risk limitations, like in terms of limiting risk through the being long options, was it actually a positive time for you?
It was a positive time. We were kind of lucky. So, there was enough rumors in the market about large leverage positions, and I have never wanted to take leverage. I just buy options. If I want to take leverage, I'll spend the premium. If it goes to zero, I just was wrong.
Right.
So we were buying floors in 1998 from like March through July. We just kept buying floors.
Okay, so why don't you explain to people what those are?
A floor is just the right to lend money at a certain interest rate. So at that time, I think rates must have been about 6%, maybe they were 5%. Anyway, LTCM blows up and the Fed starts cutting rates, and those floors are now worth more because, you had the right to lend your money at, say, 6%, and suddenly the interest rates are at 4.5%, and people are saying, well, that's worth more than when you bought them.
Right.
And before that, the volatility on those floors was super, super low because nobody had expected rates to go down. And we had 100% year that year in 1998.
Oh, wow. And
I remember the JP Morgan credit officer picking up the phone, calling us after LTCM blew up. He said, we're calling all hedge funds, but I know I don't have to actually call you. You're probably long options, so you're probably okay. And we were. I mean, I think, back to risk management, cutting off the tail or just being sure about how much you can lose makes a big difference. I mean, that's asymmetry, right? Like buying a stock, it can go to zero.
Yeah.
But they can't make you pay more.
Right.
And it can go up any place. I can go, look at that GameStop stuff that happened last month, right? I mean, it can go up tenfold. Who knows where it can go? So that's an asymmetric bet. In the same way, in options, they can only go to zero, or they can go any place. And the nice thing about that is that it allows you to sleep like a baby. You just don't ever have to worry.
So, Jim, can I ask at what point in your career you came to that realization? And was it like an aha moment? Was it over time, or were you always like that?
No, I think it was just over time.
Yeah.
As these markets developed, I just learned more and more about it, and I always believed in asymmetry, and I believed in thinking about the world. And as I was thinking about equities and options, and not having known anything about them, I realized that these were all asymmetric instruments, and that therefore they belonged in a portfolio. And I still think very similarly. I mean, I don't think I've really changed.
Right.
It's the same thing like, you and I were once talking about Bitcoin, and I remember you were not.
Yeah, I'm not as smart as you, Jim. You can tell this story. Why don't you tell people? Because I think Bitcoin is, a good example of the type of thinking that you apply to your portfolio management and the reasons why you put it in there. So why don't you walk people through your kind of evolution of owning Bitcoin?
Sure. So I looked at Bitcoin when it was trading at $90. And I didn't buy it because I didn't know how to hold it.
Right.
I didn't know what to do. I'm technologically totally incompetent. I can barely turn on the TV. And I just didn't know. I was afraid that somebody would just come in and steal my Bitcoins if I bought them. I wouldn't know what to do with them. And then there was this Mount Gox thing where, some large number of Bitcoins was stolen because somebody hacked it. And I said, see, it just proves it.
Right.
And then as time went on, I realized, it's becoming a real market. And in September of 2019, I said, look, this is just silly. I don't know what this thing is worth, but I know on the downside, it's only worth zero.
Right.
On the upside, I have no idea. I talked to people who had started in this business. A company called Pantera does a lot of Bitcoin business, has Bitcoin funds, etc. And I knew the guy who had started it. And I went to a conference. The guy says to me, this thing could be worth anything. I mean, it could be worth $1 million of Bitcoin. And I said, it's trading at 8,000. This just doesn't make any sense. You can lose 8,000 and it could be worth 10x or
right.
100x. And he said, yes. I said, well, that's a no-brainer. So I took 3% of my net worth and bought them, and I'm not touching them.
So
and I think that the point is not to touch them.
Right. Okay, so why don't you tell us why that's the point? And surely, to goodness, at some point you have to sell them. Like, what would be the point where you'd sell them?
That's a really good question. I think I'd sell them if they became 50% of my portfolio.
Oh, that high? Like, it would have to be that much?
Yeah. I mean, because if they go back to zero, it's kind of hard to pretend that, well, you only lost 3% of your net worth.
Right. Well, that was going to be my next question. How do you handle the emotional swings? Like, to me, if I have a position that, I put in 3% and it becomes worth 20, and then it goes down to 10, yeah, it's still almost more than a three bagger, but I'm down 10 in my mind. So then I end up making the wrong decision. I end up puking into holes and stuff like that. So for me, I sell on the way up. I just have to keep it. I just can't. I can't stomach it, but obviously you can. What's the secret?
Well, I think the secret is just analytics. So there are a couple of things I've been thinking about. But take something like Amazon, right?
Yeah.
I mean, Amazon in December of 1999, so just before the dot-com bubble blows up, is trading at $100 a share. Dot-com bubble blows up, it goes down to 10.
Right.
And now it's at 3,000. Wait a second. If I'd sold mine, I probably would have never bought it.
Right. Okay. So that's a good point. Yeah.
I think the issue is one that portfolios are kind of driven by the outliers. So there's a guy named Bessenbinder, and I can send you his papers. He wrote 2 papers. One is on U.S. stocks. Do U.S. stocks beat the 1-month T-bill rate?
Okay.
Well, the answer is yes. Everybody knows that U.S. stocks have an equity risk premium. They make you more than the 1-month T-bill rate. He looked at the data back to 1927 for every single U.S. stock. And 55% of stocks went to zero. And the bottom 94% of stocks gave you the 1-month T-bill rate.
Okay.
And it was 6% of all stocks that drove the equity risk premium.
So you have to hold them, otherwise.
So there are 2 things to do. One is try to avoid the 55% of stocks that go to zero.
Right.
Like if you think Bitcoin's going to zero, try to avoid it. Don't buy it just because, it's asymmetric.
Yeah.
Right? I mean, there's got to be more to the asymmetry than, something's asymmetric. I don't buy every single asymmetric bet. I still have to believe that, hey, like it's at least 50-50 that it's not going to go zero.
Right. Okay.
I mean, I don't do asymmetric bets where I think it's 90% is going to zero and 10% is going to infinity.
Right.
That's like buying the lottery ticket at the local store, when you pay $2 for a $50 million ticket.
Right.
Yeah, but the probability of winning is like 0.00001, right?
Yeah.
So it's not worth buying.
Okay, so I have a question about this in terms of you said you'd sell it if it got to 50% of your portfolio, and you're running a family.
So let's start selling.
You start selling it. So you run your own money. You have your own family office, but most portfolio management is done professionally, and they would never be able to do this. Like they would never be able to allow an asset to accumulate to that percentage of the portfolio. Do you view that as an advantage to managing your own money?
Yes, totally. I think there are several things that make managing your own money an advantage. One is that you can become as overweight from profits as you wish.
Right.
And the other one is that you really should have no time frame. Like, it doesn't matter to you if it's December and now you're coming towards year end, or it's January and now you can suddenly take new risk. It's all irrelevant, right? You're just trying to build more money and have a good time and do something useful with the money that you've earned. I mean, I'm quite philanthropic. I support a lot of human rights work around different places, and there's a reason why I work.
Right.
Because I want to give it away.
Do you think that there's any professional money management kind of shops that have managed to create relationships with their clients that allow for managing money in more of the way that you do? Or do you think that is basically you can only do it for yourself?
I haven't met any.
No.
So maybe they exist. I think it'd be great if it existed. I hope it does. But I have not met them. Right. Everybody I know tends to rebalance. And if you rebalance, you're selling your winners.
Right.
And buying losers, right? I mean, that's what rebalancing is all about. And if you read Bessenbinder, that's just a recipe for mediocrity. That's how you end up, kind of matching the market if you're lucky. Otherwise, you probably don't match the market.
The other thing that I always say in terms of retail where they have the advantage is that they have the ability to sit on their hands. And then I
could get to that. So, macro hasn't made money for 10 years till just recently. Like a year ago, macro funds started making money again, right? From about 2010 to 2019, macro funds were the worst performing.
Right.
And, I didn't do well either. I was getting divorced. I didn't focus. I blamed that. But also something else was happening. The markets changed. Maybe it was the fact that algorithms became much more prevalent and, like news was immediately taken into account in prices, where in the past you maybe had an edge. If you were on top of the news, you could think about it and it took longer to disseminate. And I tried to figure out what else was going on that macro people were doing wrong. And I started talking to some private equity people, because private equity did okay 2010 through 2020.
Right.
They didn't knock the ball out of the court, but they did fine, better than macro guys. And the venture cap guys I talked to, basically, I was talking to a friend of mine, he said, like, we look at 120 deals a year and we do 6. And macro traders look at 120 deals a year and do 118. We're always trading.
Hey, you've been hanging around with me too long. That's your problem.
We're always trading, right? So sitting on your hands and just not doing anything, like you just said about the retail traders, is so important. It's so important. As a matter of fact, like, we get this dopamine rush to do things, right? We enjoy it so much. Yeah. I set up a separate little account with a tiny amount of money that I can just play around in.
Okay.
Just so I get the dopamine rush.
Oh, so like,
and it doesn't matter. It's like my kids playing computer games.
so
I
that's
try not to mess up what I'm actually doing.
when you feel like you got to trade a little bit, you just go trade your little play money account.
Yeah.
That's genius. That's genius.
I mean, it just takes away that pressure of trying to actually do something where you haven't spent enough time evaluating the idea and thinking about it and coming up with, a checklist. So one of my favorite books that I would recommend to anybody is called The Checklist Manifesto. It's by a doctor named Atul Gawande. And I think medicine and investing is very similar. You're making decisions under uncertainty. Guy's tummy hurts. You don't know why. Could be a million different things. You ask them questions. You're trying to analyze it. So this guy, Gawande, was asked by the World Health Organization to look at hospitals around the world to figure out how we could lower mortality rates and mistakes.
Okay.
And he came back with a really simple thing, a little tiny 5x8 checklist on the door. Before you operate, you check. Did this patient get an antibiotic within 4 minutes before the surgery? Yes, check. Are you sure what leg you're supposed to operate on? Did you check that? Yes. Basically you have a checklist.
Right.
And hospitals that started having a checklist
Yeah.
made enormously fewer mistakes.
Wow.
So I think when we have a checklist for our trading, it makes a big difference. And the first thing to do is basically, hey, do I have positive expected value on this trade? Like, what do I actually think the probabilities are?
Yeah.
Do I think it's 50-50? Yes, okay. But is it the upside is like 2x to the 1x downside? I can multiply them out. Okay, I have positive expected value. Perfect. Second thing that people don't do enough of is how big should my position be? If I find this trade, whatever the reason is behind this trade, I like it. Okay, now how much do I do? Well, what I tend to do is I look at the Kelly criterion, which I don't know if you're that familiar with, but it's basically the betting strategy, right? And the Kelly criterion is a first attempt to give me a total upper boundary.
Right.
Because I actually think that the Kelly criterion is way too aggressive, number one. Number two, we are way worse at forecasting the probabilities than we think. I mean, it's not a coin flip.
Right. We don't know the probabilities of our trade. We're estimating the probabilities of our trade.
Right.
Yeah.
So I do a Kelly thing where I put in the numbers that I think are the right probabilities, and then I divide the number by 10.
Oh, okay.
Like I take 10% of the Kelly.
Right.
So basically, if you take Bitcoin, right, and you say, oh, it's trading at 8,500, it can go to zero. You lose 100%.
Yeah.
And then you say, well, my upside is 1,000%.
Right.
You're just guessing, right? Yeah. I mean, you put in the number. And then you say, well, let's say it's 50-50. I don't know if it's going to work or not. Well, when you run that through a Kelly calculator, it'll come back and say that you should have about 30%. If somebody offered you that bet, you should put 30% of your NAV into that bet.
Right. So for those who don't know, the Kelly is basically a mathematical formula based upon the payoff profile and the odds of the bet, being successful. It maximizes the payoff over, many different iterations of the portfolio. If I got it right?
Exactly.
Yeah. And,
perfect.
So you start that as your upper boundary and you use that as a basis to use, and you say, I'll probably go 10%.
I divide it by 10.
Okay. So I have a
question.
question.
Because basically the other thing is you're not going to only have one bet in your portfolio, right? And also you don't know what the correlation is between bets. You think you have an idea, but correlations are so unstable, they could all go to zero simultaneously. It shouldn't happen, but hey, with my luck, anything can happen. So I'd use 1/10 of Kelly for things that I really care about. And I think, I've done fine that way. I can sleep really well. I think of anything that I do as an option, it can go to zero.
Yeah.
Or it can be worth more.
So Jim,
For example, right now, let's take the stock market right now, right? I mean, wherever the price is at 38.30, whatever. I mean, it's 50-50. It'll be higher or lower over the week, right? So now you might have to have a bigger picture view. I have a bigger picture view that, panics are followed by manias.
Okay.
We had the dot-com mania. That was the last real mania. That's when prices exploded to the upside.
Yeah.
Then we had a bottom in 2008, 9, right? We had the panic. And then over the next 10 years, we start grinding up. And I think we will just continue to grind higher and higher. But then we get COVID and we have another panic.
Right.
We haven't gotten close to the mania stage. I mean, are there indications that things might be frothy? Yeah, this whole SPAC. Everybody wants to start a SPAC. Seems a little frothy to me. The fact that, Wall Street Bets can get 4 million people to look at their website and get all excited, a little frothy to me. But they're also upsides. The fact that Wall Street Bets is bringing all these new investors.
Right.
Great. I mean, so many new people with new ideas and how to approach things. Fabulous. I also tend to think about, how do you measure overvaluation? Right? Take a PE ratio.
Right, okay.
Right? The PE ratio seems to be high. Well, but, in 1918, the PE ratio was 5, and in 2008, it was 65. What's the correct PE ratio? I don't know. I just don't know, right? So if I have to have a view, I think we're not close to mania. What I'll look at is some outside ratios. I look at M2, S&P divided by M2.
Okay.
That gives me something that's not just internally driven by the S&P.
Right.
It's not self-referential. So in the dot-com mania, dot-com bubble, S&P divided by M2 got to a ratio of 0.31.
Yeah.
Well, today it's 0.19.
Right.
So we could go up to get to that same feeling of kind of, whoa, the stock market's really flying. We could go up 55%, and then we get to 0.31.
Right. And there's no saying that it's going to stop there either.
And I'm not saying it's going to go there, but to me, that's kind of like a nice target. So once I have that target, that gets me to, we should get to 5,500 on the S&P sometime.
Okay.
Someday.
Right.
So what do I do about it? Well, I price up. What does a digital option cost me for a 5,500 strike over 1 year, 2 years, 3 years?
Right.
Right. So 5,500 is about how many percent away? So we take 5,500 minus 3,850 divided by 3,850. Oops, why is my calculator?
While you're doing that, why don't you tell us also what a digital option is?
Oh, digital option is basically a bet option.
Right.
It's a great option that allows you to basically buy an option without an increased tail. So if you do a bet option, what happens is you pay a certain fraction of the payout.
Yeah.
And if that event happens, you get paid 100.
Okay.
So let's say I say that I think at some point in the next year and a half or 2 years, the S&P will close over 5,500 at maturity of that option.
Right. Which, by the way, is 44.7% higher.
So that's 70% higher? Or
44% higher than the current 3,800.
44% higher. Okay. Yep. Are we going up 44% in 1 year? I doubt it.
Right.
I mean, it could happen.
Yeah.
But, it's a big number. It doesn't happen often. Can we go up 44% in 2 years? Well, that's 20% per annum compounded.
Yep.
That could happen. So I call an investment bank. I say, well, how much do I have to give you today? So you give me 100 in 2 years if the stock market's over 5,500.
Right.
Well, they said you have to give me 3.9% of the money today.
That's it? Like it's that kind of number?
Are you feeling surprised?
Yeah, I would have thought it would be fatter than that. I would have guessed it would have been way higher.
Exactly. So my gut feeling is that the probability that we go to 5,500 over the next 2 years is more than 4%.
Right.
I mean, it's not a 25-1 bet against that this happens.
Yeah.
We have a democratically controlled government. We have a super ministry run by Yellen, who used to be chairperson of the Fed, it's the first time in history that monetary policy is working with fiscal policy. We're going to have an infrastructure bill. We're going to have 1.9 trillion in COVID relief. Could the market be up 44% in 2 years? Easily.
For sure.
And if somebody's going to give me 25-1 odds that that's not going to happen, would you take those odds?
For sure. Bring it on. Bought from you.
Right?
Yeah.
It's a no-brainer. Yeah. I know that I could be wrong.
Right.
I mean, would I cry if I'm wrong? I'll lose my 4%. So let's say I do $5 million payout and I give them $200,000. I'll lose $200,000.
Right.
Okay.
But you can make $5 million bucks or 4.8 million, right?
And so basically, I bought 5,500 2 years for 4%, 3.86%. I bought 5,500 3 years, which compounds at 13%, for 5.8% payout.
Yeah.
Wow.
So that's like 100 divided by 6, right?
And Jim, I remember chatting with you in the March COVID lows. And when I was getting all sorts of flack for being bullish, and you were dipping your toe in as well, and you were saying, I'm feeling the same way. Were you buying it then, or was that something else?
I was long. I was long. So I had these exact same options, except shorter. So I had December of last year options. So that was December 2020 options.
Yeah.
I bought in September of 18.
Okay. So you use this almost as a portfolio replacement strategy for what generally people would use as like a straight long equity.
Yeah, definitely.
Oh, okay.
I think it makes perfect sense because net, I know that if the world blows up, like during COVID, did I have a great time? No, my options got marked down close to zero.
Right.
But they actually all came back and ended up being I didn't get paid 100 because my strikes were 35, 36, 37, 38, 39, 4,000.
Yeah.
And we ended the year around, I don't know, like 35, 50 or something like that. But I sold them when they were worth 3x. I just said, you know what? I don't know, COVID. I just made 3x my money on my options premium. I had a size position. Life's not bad.
Yeah. So you don't actually have like any just straight Delta One trades. Are they all is almost all your portfolio options?
I do have Delta One trades also. I believe in narrative.
Okay, why don't you explain to us what you mean there?
So narrative is the fact that stocks trade based on the stories people tell about them. Like even Bitcoin. The narrative is suddenly all there. Everybody's talking about Bitcoin and crypto and decentralized finance. And you open a newspaper, it's right in there. Right. It's a story that's driving the price. We don't know what something is worth. Like, what is Bitcoin worth? I don't know. But I know that if a lot of people want to buy it, it'll be worth more.
Right.
And the more people read about it,
the
more likely it is that they say, whoa, this is something exciting. Like a story I totally missed. I did a bad job. Vaccines. Okay. Right? When COVID hit and we started seeing these stories on vaccines and how Moderna was doing this and Johnson & Johnson was doing that, in retrospect, I feel stupid not to have bought call options on those stocks.
Ah, okay.
Or just bought the stocks and said, look, like more and more people are going to be excited about biotech.
Right.
And this is so exciting. We can make these vaccines and, oh my God, it's going to change the world in the next 5-10 years.
So there's a fellow actually, Chris Camillo, and he does something called social arbitrage, he calls it. And it's very much about the same thing in terms of narratives. Like, so what would be other examples of narratives that you would do? And do you always use options for them? Like are they always something, or will you just...
Oh, that's why I don't always use options.
No, so on some of these you would have just gone and got a basket of vaccine stocks and owned them.
Take nuclear now.
Okay.
Right? Like nuclear is becoming a meme. It's becoming a narrative.
Right, okay.
Why? Because of the green sustainable energy, the electric grid in Texas blowing up. People are realizing that, just having sunshine and wind is okay, but it's maybe just not good enough.
Right.
And when France has 20% of its energy coming from EDF, and around the world there are quite a few nuclear reactors, they don't all blow up, and it's becoming safer and safer. And Virginia this morning the state of Virginia put together a nuclear strategy on, how do we bring nuclear energy to Virginia. This is something that's just bubbling.
Okay.
It is just starting to take off. So now what would you buy? Well, you can buy the Uranium Trust,
right,
which I own, and I buy CCJ, the Cameco.
Right.
And could I buy options on them? Yeah, I could. I do also. But I also just have some Delta one,
right,
because I think it's just going to take off, and then I'll just be relaxed about it and hit the bid when I see that it's frothy.
So in terms of the narrative, how do you go about deciding when a narrative is gathering steam? And how do you measure it? Is it and are you just reading everything you can? Are you like a sponge that just...
So one of the reasons I love reading you is that you're part of my narrative.
Okay.
I believe that one of the reasons the macro guys didn't do well for 10 years is that many of them are smart and read a lot. And I look at my emails, and I now get 2,000 emails a day, and I used to get 200. And there is this information overload.
Right. Okay.
So you need to rely on friends and others that you can trust to kind of point out to you, oh, this is something interesting.
Right. Okay.
Right? If you have a good salesperson who says, oh, there's this really good report we just put out on blah, blah, blah.
Yeah.
Kind of like, okay, it's worth it. I mean, I'll take a heads up from people I trust.
Okay, I understand that.
And they call me and they say, oh, here's something. I think of them as curators of my information flow.
Okay.
And having good curation is really important. And I think it happens by being linked into good newsletters like yours. And I kind of look at, what are people writing about? What are they thinking about? We used to have a little system that we actually looked at Twitter feeds, like a social thing.
Right.
But it was way too quick. It goes up, it goes down.
Okay.
It's not consistent. Like the nuclear thing is going to take months to play out, and it might take years to play out.
Yeah.
Right? It's not a meme where it just kind of explodes up and then collapses again.
Okay.
It's something that's structural to the world.
Well, let's talk a little bit about those memes and those things. I've noticed that a lot of times it used to be we used to laugh about selling to the dentists at the end. That would be the final people you'd sell to, is when the dentist figured it out, you'd sell it to them. And now the dentists are just as fast and probably better traders and are actually becoming parts of these groups. And it's all this social media. I was wondering how social media has affected your trading and whether you've noticed anything changed, and especially I find in the last year with this advent of more connectedness of investors.
Well, I think information just gets passed along faster and gets processed faster than it ever was before. And, the one thing that I have learned in the last 40 years of doing this is you don't have to be the first one into a trade.
Right.
You don't have to forecast where things are going to be. You just have to start seeing the wave building. And as it builds, go with it. So technicals are okay. When you start seeing prices move up or down, it tells you something. If you have a story around that could continue, if you see Cameco is now up 20% in the last month and a half, well, should I just sell it because it's up 20%? No, I think the story is just building.
Right.
This whole green energy story is just starting when the U.S. government is starting to spend money on how to rebuild the electric grid. We'll start seeing more and more stuff about nuclear, and I think it's not something where you just jump in and out.
Yeah.
So I think social media has expanded how many things can happen. Like GameStop only happened because of social media.
Right.
Like if these guys had not been able to communicate with each other,
Yeah.
it wouldn't have happened.
Right.
So, there are good things to it. I actually started looking at this Wall Street Bets thing just to kind of see what are they talking about. Why not?
You're-
There's no downside in finding something interesting.
oh, there you go.
Whoa.
The,
Sorry about
lots
that.
of action there. Okay.
Yeah, my 2 dogs are running wild.
Okay. So listen, one of the things, Jim, you mentioned is that you studied economics. You didn't like it, and I understand that. I was similar to you in that aspect, but I kind of fell in love with MMT, and in terms of, to me, it explains so much of the plumbing, so much of the things that I felt like economics had fallen down on, and too often to me, people view MMT as a kind of a prescription, whereas I think it's more of a description about how the economy works. I was wondering what you feel about MMT and whether it's changed your views about the dismal science.
Oh, that's a hard question. I mean, it hasn't changed my view about the dismal science. I just think it's super interesting and it makes so much sense.
Right.
It makes just so much sense in terms of, the only resource that you cannot recoup is the person who couldn't go to work and lost a day.
Right.
That day never comes back. So if you can actually implement a full employment policy, then you can have all resources ticking away at maximum capacity. And if for some reason it leads to inflation, one thing I really like about that MMT story and the book,
the deficit myth by Stephen Keldon,
is that the correct way to address inflation is not necessarily through higher interest rates, but through higher taxes.
Right.
Take out the money, and inflation will collapse. Right. That's basically what happened in the Second World War, when they were pumping up the economy, and then they just raised taxes. That's how we ended up having really high taxes into the 1960s until Kennedy slashed the marginal tax rate.
Do you think that the politicians will be able to have the strength to do that, though? Isn't that the big pushback?
I think this is something that will definitely resonate with the democratic government, and people like Elizabeth Warren, who are talking about the wealth tax, make perfect sense to me. I mean, if you want to address inflation, just increase wealth taxes a little bit, and people have less money to spend. And this whole idea that it's very difficult to implement, I think, is a bunch of BS.
Okay.
Because all pay wealth taxes already. If you own a house, you're paying taxes on your house. That is a wealth tax, right? So the middle class is already paying a wealth tax. It's just that the guys who own all the stocks, the 10% of us who own a lot of stocks, have been lucky enough to never have to pay taxes on that.
That's right. And
until we sell them, and then we have a profit, and blah, blah, blah. But,
and a bunch of them got it on carried interest as well. So I have a question for you in terms of when you're thinking about this MMT and the potential for inflation to take off. I look at it and say that never before has, or not never before, but it's probably been decades since we've had the stars align for the potential for inflation, and sustained inflation. Do you go and look at some of your option strategies, and are you putting anything in place to take advantage of the potential increase in inflation in the coming years and decades?
Well, I really think that being long equities is an inflation hedge.
Oh, okay.
Not short term. So it might not be true for the guy who has a 3-month holding period or is measured by his boss about, oh my God, it's September and what's going to happen between now and December. But if you have a personal account and you think that inflation is going to start going up significantly, you want to be long equities. I mean, it's totally clear. Looking at emerging markets, looking at all kinds of markets, like Israel had inflationary burst in the early 1980s. If you were long stocks, you're basically going along with inflation. You made back the money. The same in Turkey. If you were long stocks in Turkey, you didn't lose money. You might not have made money, but protected your wealth.
It's a real asset.
It's a real asset. I mean, underlying it all, equities are a real asset. I think actually the cheapest way to protect yourself is buy 10-year S&P digitals or calls struck at 10,000.
There you go.
Right?
That's awesome. Okay.
You buy it, put them away, and then look at them in 10 years. And if you had low inflation, you're going to be way higher than that. So you wouldn't want a digital because you'd want the tail.
Right. You don't want to cut off the right tail, right? In case you
don't want to cut off the right tail on that one.
That's right. Okay, so listen, Jim, we're getting towards the end. I'm going to ask you a few questions here. I'm going to start with my new favorite question is, are great traders made or born?
I think traders can be made, but there is a requirement to be curious. If you're curious, you can be a good trader. You just have to learn not to lose too much. And then over time, you'll figure out what to do to make.
Okay. Number 2, what are your favorite investment books over the years?
Well, the first one is Atul Gawande's The Checklist Manifesto. And the second one is Super Forecasters by Tetlock.
Okay. Why do you like
book.
that one?
He wrote a book on political forecasting, and he basically showed that people do a terrible job at forecasting. And he then went out to try to figure out, how can you improve on this? And he ended up winning the EARPA, which is the Intelligence Agency Research Project. It's the same thing as DARPA, but for the Intelligence Agency. They have an annual forecasting thing. He won it 2 years in a row.
Wow.
And he wrote a book about how you do it. And how you put probabilities on things and how you have to use small adjustments in the probabilities as news comes in. And it's a great book. The final chapter actually is great because it actually gives you a little checklist on what you need to do to be a better forecaster.
There you go. It's combining your 2 favorite books. Okay, I'm going to give you this one here. I'm going to give you a choice. You're allowed to tell us your best or worst trade. You get to pick.
Best or worst trade?
Yeah.
Oh, that's hard. Well, I would say the best trades were the ones early in my career in Russia, buying things that then went up enormously. I mean, I set up with my lawyer a table outside of a company called Moscow Telephone and bought stocks from the workers at paying them $2 a share.
Right.
And when they listed on the exchange, they started trading around 2,000.
Oh, my God.
That was one of my best trades.
That's a pretty good one. Okay, and I'm going to finally, the last one, and I'll let you go, is if you were giving advice to a young person starting in the market that was passionate about the markets, what would you tell them?
Keep a diary.
Oh, that's...
Write down what you're thinking. And look at it every once in a while. Go back. Try to learn from your mistakes. Try to improve on what you did. Try to learn from the outside influences that were driving that decision. What happened? How did it work out? Where were you right? Where were you wrong? I would also tell them, sorry about that. I'm just going to add one more thing.
No worries. We're always happy to hear one more thing.
I'm sorry. That they need to listen to the game master. So Monty Hall was a game master. You know the story about Monty Hall.
Yeah, with the famous...
The 3 doors, ABC. Yeah. There's a car behind one door. You pick door A. He opens door C. Should you switch or not?
Right, okay.
And you should switch,
right? The famous Monty Hall problem.
Famous Monty Hall problem.
And when they...
why does it work?
Pardon me?
Why does it work?
Well, you tell us.
You should switch because Monty Hall is giving you information.
Ah.
By opening the door where there's nothing behind it, he's saying, look, you were lucky you didn't choose this door. But he didn't randomly open the door. He opened the door where he knew beforehand there was no car behind it. Who are the game masters today? Yellen. Yellen is a game master. When she says, go big, she's giving you a message. Ah. She's the game master. Listen to her. When the Swiss National Bank comes out and makes a statement like, we might have to intervene in currencies, when they hadn't said that ever before, they are telling you something. So picking your game masters and listening to them, I think is really important for young and up-and-coming traders because it really helps with improving the odds on the bets that you take.
Jim, I don't even think it's young and up-and-coming. I think that could be the best answer I've ever gotten to that question.
We should do another hour.
Yeah, there you go. Well, Jim, it's been a great interview. But before we let you go, can you please let our listeners know where they can find or follow you or learn more about Falcon Management?
I'm not a real big social media guy, but I have a LinkedIn account. which I love putting good stories on. Number one. Number two, I am perfectly happy to talk to any of your listeners. I mean, if they want to send me an email, jleitner@falconmgt.com, I will answer. I mean, it might take a while. I'll look. But I love people. I love talking to people. I love learning from people, and I love sharing ideas. I think the nice thing about ideas is that they're never worth less because you give them away.
Oh, Jim, so many gems at the end here.
Nuggets, yeah.
Like, so many nuggets. Thank you so much. It's been a real pleasure. Thank you for your time, Jim.
Thanks, Jim.
Great. I love talking to you guys. I have a million more things to talk about, honestly.
Well, we'll have to have you back. All right, cheers.
Okay, Patrick, it's time for Talking Charts. What do we have this week?
Okay. As always, we start with the top three things, but let's start with just reviewing what we talked about last week, and so many of them became so relevant. Number three, post-OPEX volatility. The gamma pin was lifted, and we basically had volatility return. I mean, sure, the markets are down quite a bit off their high, but it's just intraday volatility has been whipsawing. Like, we've doubled or tripled the intraday volatility from where we were last week, and just the whipsaw is very, very evident. I
think, Patrick, you can count this as a win for us. It was definitely something to watch, and we actually got the call right.
Once. All right. So the second thing, we were watching for the State of the Union.
Yeah, and did it happen? I was like, that's how out of touch I am. Obviously, it was non-event, or did it not happen? Now, you can tell how much preparation we've done for this.
All right, number one.
Okay, let's just go on to the next one, because, obviously, I don't know what's happening.
Are the fangs rolling over?
Oh, and okay, so that was a good call. See, we shouldn't talk about anything politics. I don't have a clue what's going on there, but the fangs are definitely rolling over.
Let's start by picking on Apple. And let's see. There's my chart right here.
It looks like shit.
Yes, but
that's a technical term.
Yeah, that's a technical term. Looks like shit. And but then what's interesting is Tesla was getting hammered on the downside.
Okay, we don't want to talk about that too much.
Okay, and then but some have held up. Like Facebook doesn't want to give out. It's kind of muddling, but it's not giving out, and Google's holding up pretty well. But there is a predominant thing, like the big wave of selling that started on that Thursday sell-off. The NASDAQ was where the center of all the heavy selling was, and that really is market cap weighted to those big FANG stocks that were sort of leading the way down, right? And so that was definitely the thing to watch. And so anyway, let's move on to this week. So number three is this wave of economic data coming out. We got jobs numbers and all sorts of stuff. Well, what are you watching?
We got a huge pile. Big thanks to my buddy Dave Lutz at Jones Trading, who gave me this list. So let's just go through it here. Beige book and a pile of Fed speakers. We got Powell, which is right in front of his Saturday blackout. We got the employment from U.S., Canada, Japan, Europe. We got the China's National People's Congress in Beijing. We got OPEC meeting. We got the global flash market PMI data. We have the Australians telling us what's happening with their central bank. We have inflation from Europe and China manufacturing, and we get the UK budget.
Slow down.
And
Kev.
There's tons.
What's the one that you're watching? There's
I don't have one. There's too many there. There's too many good ones.
I think the jobs number is going to be important to watch, right?
Well, I don't know. Who knows? I'm just saying lots of economic data.
All right. So let's go to number two, because number three really wasn't that important. So number two, was this just a small little market correction, or is this the beginning of something a little bit bigger? And this is an interesting moment in the market. So let's put up the S&P 500 here, Kev. I'm going to just tack on a 50-day moving average. Let me just throw a 50 and a 200-day moving average. And we basically, on the S&P 500, traded down to that 50-day moving average, which is a typical place where a very quick little 3, 4, 5-day market correction typically pulls back to. And often the buy on dip traders would come in at that moment and buy the dip. And so it's going to be really interesting to see whether this was just one of these small corrections or whether this is like the edge of a cliff and there's some sort of bigger sell cycle ensues from here. And really, what's interesting is that if we give out this 50-day moving average, then a typical market correction, which is of the 10% variety, conveniently is down where the 200-day moving average is around 3,500. And so it'll be really interesting to see whether this is just one of these quick little buy-on dips or whether this morphs into something. But I think when we get to talking the rest of the charts, the one thing that's got my attention is that all the intermarkets are buzzing. I mean, we're seeing corrections in commodities, dollars moving higher. We're seeing treasury bonds really hitting some extremes. Like the market's shaky on the entire intermarket front. And that is a red flag for me that maybe the markets are getting wobbly here and could give out. What's your opinion?
I don't know, Patrick. It's tough. And you are correct. There's more and more signs, lots of little extra grains of sand put on the thing that'll eventually cause the collapse or not, or at least a correction. I'm withholding judgment. For a little while, I did think that yesterday was looking really ugly. The bond market was no bid for a little bit there, and the stock market looked like it was going to sell off. And then today it was met with buying again. I think there's a lot of month-end noise as well. And don't forget, we often have this kind of first of the month, put money to work effect where we get a bid. So right. I'm not sure. Patrick, you're probably not wrong, but I'm not ready at the same time to say that.
Well, listen, we haven't broken the level, so there's but it is definitely a thing to watch, right?
Because one thing I do feel that I'm more confident about. I don't think that we're going to get the rocketing straight ups that we used to have. I think those days are gone. I think there's going to be a lot more chop. And if this isn't the top, then maybe we go back, make new highs, but it's not going to be, another new high and then rocket for 10% like we used to. I think that more and more I'm convinced that we're in a spot where we're going to chop around. So that's my call. More chop.
Well, there you go.
Like
you
that guy on late night TV.
I'm seller on that. I'm actually going to take the other side of that. I think that there's going to be some really big volatility, and it's not going to be a sideways chop. I think we're going to get some pretty big whips in the market, both higher and lower, and you want to jump onto these trends and go for a ride. All right. So number one is have we seen that capitulation in bonds? And it was interesting. I mean, when we really look, so I have the 30-year bond future here, and we definitely had some very big volume days on the future, a big, really heavy sell cycle on the downside. And what was interesting, even if you look at the TLT, which is up almost $5 today, but yesterday, there was a volume day of selling on the TLT that was only comparable to March of 2020, a year ago. And so some very heavy capitulation selling and reversals. Was that the puke point in bonds, in your opinion?
Not over the long term, but over the medium term, I do believe it is. Patrick, I'll tell you one thing. You know me. I'm a bond bear. I've never seen a sell ticket I don't like on the bond side. And I wrote some blues yesterday.
What? Okay, stop the press. Wait, what the hell? Right? You bought. Tell me, you used some sort of options. You hedged it out. You just bought.
I brought them in.
You told me you've always sworn to me you have only two states: either you're neutral or you're short. Now you're actually long.
No, I'm not long. Don't talk crazy.
Okay.
No, don't talk crazy. I'm just saying I'm back to neutral, which is like being long for me.
Okay, back to neutral. All right, that's I was nervous because I was like, what?
I'm not going to get long, but Patrick, a lot of people. I feel better when everyone tells me I'm an idiot for being bearish on bonds, and lately people have been telling me I'm smart. So I better go back to being an idiot somehow, and that's the way I can do that is by covering my bond position.
All right, but let's just talk some charts here. And one of the interesting things, so we had Cameron Kreis on last week, and one of the things he talked about was the 2.5s yield spread, and it's that has been really moving.
I think it was a great call. He gave us a little sneak peek. He did it before he wrote his piece. I kudos and shout out to him. I wish I had actually gone when he said it. I was like, that makes sense. And I was like, I should go put that on. And then I got busy with some things and I missed it. And I'm like a mope because it was actually the trade. The fives led this whole sell off, and he nailed it. Good for you, Cameron. Like, well done. Thanks for sharing that with us.
The other interesting things, I mean, we really did see a lot of selling kick in everywhere. Like, for instance, this is the LQD, which is that the corporates, investment grade corporates. They again, capitulation blow off, and we got the reversal, and even the junk bonds started to crack. They started to roll over, and it's an interesting idea. But like, do you think, like, obviously, if equities are under stress, the correlation often with junk bonds and equities tends to be there, and really, those corporate bonds got slammed almost in correlation with Treasury. Would it be an interesting trade to kind of go long investment grade and short junk at this stage?
I don't know, Patrick. I'll tell you one thing. I can't tell you the number of people that are telling me that they're short HYG for a trade. I don't know where everyone's getting this.
I am too.
Oh, there you go. Of course you are. And so I'm just like looking at this. Okay, so we have a Fed that's told you that they're basically going to pump, and be extremely easy. The market doesn't believe them, but that's what the Fed is telling you. And as our good friend Jim says, listen to the game master. But anyways, and we have a HYG. Guess what the duration is on this thing?
We already did the math. It was 3.3 or something.
Yeah, so it's 3.5 basically. So this is like a 5-year note, almost like, the 5-year note duration is going to be less than 5. And so the reality is that yes, this got burned, but you have to believe that 5-year notes are going a lot higher in yield, or the credit's going to have some trouble.
Kev. I'm going to call you out on this shit. Okay, you're telling me. Okay, let's say the equity market slams 10% here on the downside on a quick market correction.
One second.
And you're telling me though HYG is going to somehow hold up, or I think that easily we're south of 84 on this. Another even 3 to 5% lower.
I'll take the other side of that.
Well, why don't we save this for a bet?
Okay, we'll save it. But
because I'm willing to put some stake on this. No.
Okay, because the reality is that if we get a correction because Apple, Tesla, Amazon, or whatever all puke for 20 or 30%, and it's a huge rotation within the market, and it's just basically taking the air out of all these tech stocks. I don't think that means that HYG has to go down and get crushed.
I think it'll be correlated. I don't crushed. Okay, so when you're talking crushed, okay, in March of 2020, that's called crushed. I mean, the thing wiped out like 25% of its value on the downside. I'm not calling for that, but I mean, can it go back to its September lows and trade it on the 82 handle? I think it can.
Okay, well, 82, but like. I think there's better things to be short. Is what I'm saying.
Okay,
because you're saying if the stock market goes down 20%, I'm going to make my 3 in HYG. Okay, great. Congratulations. I'm not trying to say that.
You got to vol adjust that because it's. I'm
just saying I don't think that it's going to be HYG. I don't think it's corporates that are the problem here.
All right, I don't fully agree with you, but let's move on.
That's fine. Listen, you know what? Actually, that's perfect.
That's what makes the market.
Almost nobody agrees with me on this one. And
so that means you're long. Okay, you're long jump.
No, I'm not long this thing. I would never.
Why not?
Because it's a shitty yield. I just think there's better shorts out there. I think there's better things to be going out and trying to shoot against than HYG. I think that you're shooting against the wrong thing. Like, you're better off going in and do. I'd almost rather do the LQD with a longer duration.
I hope you have to eat your words, buddy.
Okay.
We'll see. All right. So I wanted to just touch on just quickly the VIX, the volatility index. But I mean, we finally got that spike yesterday. We got north of 30 on a temporary basis on the VIX. But what's interesting is that almost all of the post-COVID little sell-offs had VIX spike up to almost the 40 handle. And this for a sell-off that felt very raw, we didn't have a corresponding spike in volatility the way it has in the last 6, 7, 8 months. I mean, how would you interpret that? Like, do you think that there's nothing out of whack here?
I don't know. You got me when you described the sell-off as raw. I'm still thinking about that. So much to go there. Okay, back to the VIX. I think that the VIX, like, what is the VIX actually running? Like, is it still running rich compared to the historical? Like, I'm not sure. I don't keep up with these things.
Well, it was down around the 20 handle, but the thing is that the realized volatility the last 2-3 days is probably caught that pretty quick. Anyway,
I don't know. So the reality is that, like, I hear you, Patrick, that it didn't spike like you would have thought, and there was no doubt that one of the things that didn't seem to get bid and then just take off. And where you get that Vanna and it basically, as it goes higher, you get more selling, which then causes the more volatility and it feeds upon itself. And I've noticed that for a while now, even ever since the GameStop, you didn't get that spiraling out of control with the VIX, getting bid. And I don't know. I'm feeling like that. So we're looking too close to this, and that if anything, VIX should be sold, not bought.
The fact that the S&P into the close, in the last 10-15 minutes slams to the downside. Like, look here, I'm going to put on a 5-minute chart.
You can't listen. I call BS on this. It's month.
But yes, you didn't even let me make my point.
Okay, sorry. I should. Go ahead.
Okay, all I'm saying is the fact that we sold this hard right in towards the close shows that there's still selling out there. And the fact that we haven't seen the VIX kind of puke to the upside, I still think going into Monday, the market is vulnerable. And I would be, I think that there's a very reasonable chance we still have more downside coming into Monday.
You got full zero hedge on me. You got
what?
You got the short HYG, you got long VIX and short S&Ps. You know what? It's good to see you back. Like, the world's back. We're back to where we are. Like, this is good. I feel good about everything now. Okay, let's go.
All right.
Next thing.
So then let's talk being long the dollar then.
Oh, yeah, of course.
Okay. So let's keep compounding. So we have the dollar index come back, retest its lows, and obviously in this kind of almost a risk-off manner, we are seeing the dollar have a pretty big up day today. One day doesn't make a new trend. I'm not trying to get overexcited, but it's got my attention. I'm paying attention as to whether this is actually going to follow through in any way, and like when you look at something like the U.S. dollar yen, we talked about this last week, continues to crawl higher. I don't know. And you look at the big reversals on the CAD and the Aussie in the last, the CAD just dropping from wiping out 1.5 cents in a fluid motion. The Aussie breaking almost 3 cents to the downside in 2 days. Something is buzzing in the currency world, and I'm going to be paying attention into next week. That's for sure.
I think you're kind of reaching, but I'm not going to take the other side of your trade and say that the dollar is headed down anytime soon. And it wouldn't surprise me at all if you actually get this one right.
All right. Well, it's not right. I'm just saying these are reversal candles, and we have to pay attention.
You're long dollars. I know you are.
Okay. So anyway, so let's move on to crude. I mean, actually, I'm going to say crude, but we should really say the entire commodity complex, because we've had basically 6 months of weak U.S. dollar and reflation trade full on, and these commodity markets have been, at least on an intermediate trend basis, quite frothy. Now, I'm actually in your camp of being big picture, very bullish commodities, and I'm not going to push back on that. But I think just the way you went and started covering bonds, I think these commodities have kind of overshot, and some mean reversion on almost all of these commodities. Like, look at the way that copper is reversed off of the highs. It feels like that we just saw some sort of a short term kind of peak, And I would not be shocked if we spent the next month, 4 to 6 week window backfilling all of this very bullish price action before the next buy on dip emerges. What's your take on that?
I'm not going to argue either. I sold my copper.
You said you were never going to sell your copper.
I told you, but I eventually got to sell it. I sold it.
All right.
Yesterday was my day. I did a lot of things yesterday. I saw the puke on.
I have lost faith in you, my friend.
Why?
You told me you were never.
No, I never said that. I said,
yes, you did.
Listen, I hung on there while a lot of people were getting rid of it for a long time. I did you know what? I don't get many that.
Yeah,
right.
you sold into the white heat on the upside. That's fine. That's a good trader.
No, that's not true because I waited for it to turn because I sold yesterday. Oh, actually, yeah, it was pretty close. Yeah, listen, I didn't hold it all till the last possible second. I'm not Jim Leitner. He's like I can't do that. I don't have the guts to do what he does.
That's awesome. All right, gold. Wow.
Okay, so I have a new saying that I heard from the desk the other day. Gold will make you old. I mean, there's never been something more appropriate than recently. Gold will make you old. Every time I think this thing's like washed out, everyone hates it. There's possibly no way that it could get possibly more bearish. It finds a way.
Well, one of the downside targets that I had is actually coming up.
What is it?
Well, this consolidation zone down pivoting or give or take around 1700, right along this low, and that's right in the fib pocket, right where the Fibonacci zones are as well. And I'm not saying that's guaranteed to hold there, but the fact that we had a very aggressive down day is almost the way that the bond market kind of blew off to the downside. I think there's a bunch of people puking gold all over the place, and sometimes that's how short-term lows get put in. I'm going to be watching into Monday and Tuesday whether this kind of bounces in that zone and whether we have some sort of a swing off of there, and maybe I'm just destined to get a little bit older. But
you and me both, because I added to my goal too, like an idiot. I wasn't as smart as Cuppy. He actually tweeted this out, so I think I'm allowed to talk about this. He went and was taking stabs at the long side of the gold.
He was WhatsApping me about that.
Yeah,
but it's like, I'm in. I'm out.
I know. He's like the world's he'll sit through the craziest crap on his little penny stocks. Gold goes down $40 and he's freaking out.
What do you mean? I think his stop was like $15. It was like it was
short term. The only thing he's worse at is being short. Like literally, he'll short just the tiniest little bit amount, and then he's like, I'm out. He's like Kramer when the first out.
Well,
remember Kramer?
Yeah,
like when he's like, I'm out. You don't remember that episode? Lena Hoffman.
No.
Can you believe he doesn't know the Kramer reference?
Are you surprised?
I know, but I need to talk to someone about this now because it was well done. So Patrick, there's a famous Seinfeld episode, Master of Your Domain.
Okay.
And
did we do some WTF video?
Oh, we might have, but Lena knows it. You should know this anyway. So the four of them, Kramer, George, Jerry, and Elaine, get to have a contest to see who can go the longest without
engaging in intercourse.
No, it's not that. It's
like
talking
about? Or which
intercourse with yourself.
Oh, right.
And
you could just say masturbation. But
okay. And the funniest part about it, I always used to laugh was when Elaine wants in, and they're like, "No, you're not allowed. You're a woman." And she says, "What do you mean?" And he says, and Jerry says, "It's like shaving for us." And and she goes, "Well, we shave." And then Kramer says, "But not every day." One of the all-time greatest Seinfeld lines. Anyways, so the long and short of it is there's a woman across the way who is they get to see her, and she's changing in front of her the open apartment, and they're all watching, and then all of a sudden Kramer just leaves, and then he comes back and he throws the $20 on the table. He says, "I'm out."
Yeah,
That's like you, Patrick.
Okay, I
well,
now know what seniority.
Yeah.
Anyway.
So anyways,
All
thanks,
right.
Lena. Thanks for helping me out. I got like a
All right.
Luddite that doesn't have a clue about anything.
I can't believe he doesn't know that episode. But
I know. I can't believe it either.
All right. Anyway, so let's move on to lumber futures. And well, you know what, Kev? I was just it was a week too late because I mean it printed a high of 1030.
Yeah. Well, timing's everything.
Yeah. Anyway, it's but I think that all these commodities are just a little bit overshot, and this is probably where they're going to pause, and it'll be interesting. And yeah, it's crazy what we're watching. We have to do it. I'm gonna end with the Tesla chart just because you said you didn't want to.
It on me.
All I'm saying.
I have no position.
I call bullshit. All right, so that with that breakdown, a 2-day bounce, it still looks pretty distributive in it. And then what'll be really interesting as we approach the 600 level is where I would see a reflexive rally come in that is going to be the bull trap, and I think that if we have one failed rally towards 800. I think putting on a clean new Tesla short might actually be interesting.
I can't believe you would short the man who's trying to fix the world, doing so many great things.
One tweet at a
time. He's trying to fix the world. I can't believe you'd short him. That's.
I am such a douchebag.
You're a bad human being, is what you are. Bad human being.
All right. Let's go on.
Patrick, it's time again, for This Week in Trading History. What do you have for us?
All right. So it was on February 25th of 1862 that the U.S. Congress passed the Legal Tender Act, authorizing the use of paper notes to pay for government bills. And so just some little history. 26 years earlier, when Andrew Jackson shut down the second bank of the United States in 1836. The U.S. was without a central bank, and there were only a web of decentralized commercial banks and a hard money monetary system based on gold coins. And but as always, all it takes is a war or a crisis for change to be made. And so the act ended the long-standing policy to use only gold and silver in transactions, and it allowed the government to finance enormously costly civil war long after gold and silver reserves were depleted. And soon after the war began, the federal government obviously began running low on these coins. Several proposed different things involving bonds, but finally Congress began just simply printing money, which the Confederate government had been doing in the South since the beginning of the war. This Legal Tender Act allowed the government to print $150 million in paper money that was not backed by a similar amount of gold and silver, known as the greenback back then. And so, surprisingly, Kevin, many bankers and financial experts predicted doom for the economy, as they believed that there would be little confidence in the scheme. There was also misgivings in Congress, as many legislators worried about complete collapse of the nation's financial infrastructure. And so the paper notes, called greenbacks, worked much better than expected, and the government was able to pay its bills, and by increasing the money in circulation, the wheels in the northern commerce were greased, and the greenbacks were legal tender, which meant that creditors had to accept them at face value. So in 1862, Congress passed an income tax and a steep excise tax, both of which cooled the inflationary pressures created by the greenbacks. And so another legal tender act was passed in 1863 by the war's end. Nearly $500 million of greenbacks would have been issued. Remember when $500 million used to be a lot of money, Kev?
Yeah.
Anyway, this led the foundation for the creation of a permanent currency in the decades after the Civil War. And so, Kev, if you look at that picture, they have the money printing wheel. Anyone who thought this was some meme from our current
That's
time
right.
and
I was,
age,
I was expecting the guy to say money goes brr.
yeah, like the guy they should have a burr right on
Yeah.
that picture. But then there was that picture of you. Is that you in that picture to the to the left where
No,
you're
that
holding
guy's
the
got
inflation boogeyman?
That guy's got way too much hair for me.
Yeah, but he's that's Cuppy then. But it's the inflation boogeyman being waved there. Project Zimbabwe, waving hands.
There you go.
Anyway, but interesting story. That's all I got, Kev.
That's good. It's great. Nice and quick. Short and quick. I like it, Patrick. Okay,
All
time
right.
for skin in the game. So, Patrick, you were looking good.
Oh man, I was looking great. And like you on Monday, you were conceding. I should have given you
An out. Should have showed me an
out.
offering. Yeah, so let's just go over it. Last week with the bet was the U.S. 5-year 30 yield. Sorry, let's try that again. U.S. 530 yield curve closes above 156 basis points. And you were looking really good till yesterday, Patrick. And then
I mean, it was unbelievable.
It was ugly.
It spent 3 days going straight up. I was laughing. This is a problem. You should never count your
well, that's probably why it
chickens
occurred,
before,
because you were
the
like
eggs.
tempting the gods. You counted your chickens, and then your chickens got taken away. As you know, I know the story. There's a famous, or not famous. There's a hedge fund manager I know that was planning on buying a plane with his winnings from a particular stock.
All I wanted was a burger, buddy. All I wanted was a
I
burger.
know.
This is not a plane.
You go a little lower than this guy, but that was the worst. Like when you're like not just buying cars, you're buying planes. You know the gods are going to not smile on that, right? Like that's a problem.
Yeah.
I actually have a question for you, a serious question. I have noticed between like the Bitcoin guys with all their have fun staying poor and all these people just rubbing it in terms of all these things, that have just been rifling. What's happened? It's like Armageddon out there. The market gods are not fixing any of this.
Yeah.
It's like my world is being turned upside down. I offer respect to the gods all the time. I'm treated like shit. These other people are just like, waving, taunting the gods, saying stuff like have fun staying poor, and yet it just keeps going higher. Anyways, good for them. They're obviously atheists that don't believe in the market gods, but you and I know better. So unfortunately for Patrick, I won the bet, and so I get to pick a new bet, right?
Yeah.
So let me tell everyone about the game. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode. The currency for the wagers, everyone knows it, won't say it. The winner of the bet is obligated to come up with a new bet for the following week. All wagers settle in full, and there will be no netting of positions. Lots of people excited about the Market Huddle piss.
Oh yeah, we're gonna have a big piss up.
Yeah, it's gonna be awesome. It's gonna be epic. We got people coming in from like our good friend Rupert's coming in from out of like in Asia, like he's flying in from Hong Kong.
Yeah, no, that's commitment.
Yeah, that is commitment.
That's commitment. So anybody who says like I'm not going to drive from an hour north,
that's right. I'm not coming from Kitchener. It's too far.
All right. So what's the bet?
Okay, so the bet is you kind of laid it out there when you started talking so bearishly about HYG.
All right.
So pull up.
I love it.
Pull up the chart.
I'm going to pull it up. Yeah.
I'm going to give you a one touch. I feel like you're going to be more tempted by the one touches.
All right.
So we're sitting there 86.44, down $2 for the week. 84.44, one touch.
84. My God.
So
it
one
can,
touch.
but you know what? You're too far. Like if you just came a little closer.
Okay, then give me a chance then, because I don't want this other side of the bet. Give me a chance. Okay, I'll go up. I'll go up to 84.88.
Well, if you go there, it's not going to be a big bet. If you go higher, I'm willing to go higher up on the payoff.
Okay.
So
85-11. 85-11. My last.
Okay.
My last.
All right.
my last-
85-11. I'm in.
Okay.
I'm in. 85-11. I'm taking under. Or one touch.
You're
I'm
going to
taking
take the touch. Okay, that's fine. 85-11. And I'm not doing a steak because I don't feel that strongly about it.
Okay.
But I will definitely do. You know what? I haven't won a bottle of wine yet. And I probably just Gucci'd it by saying I haven't won one. But we haven't bet a bottle of wine yet. Let's bet a bottle of wine.
And shit, you're going to definitely be on the expensive side. It's not like me.
No, you know.
buying.
Well, I know you like your wine in boxes, but I am a little more sophisticated than that, but not much. Okay, so what did we agree?
I'm in for a bottle of wine. Yes.
Okay. No boxes allowed. 85-11, Lena. It's a one touch right there. Okay.
All right. Okay,
Let's
so
get on to the next the next part of the show, which is no
Yes.
stupid questions, just stupid answers.
yeah. So
And Lena,
hop on. Yeah.
Hello.
Hello.
Hey.
So we have 3 questions this week. Hi, Lena, Patrick, and Kevin. Love the show and will make dedicated trip from Asia to Toronto to help you.
This is
drink those
Rupert. We used
pictures
Rupert's question.
when this damned COVID is behind us. Nerdy question on call debit spreads, please. In this era of elevated volatility, especially single stock vol, call spreads are increasingly on my menu as a way of minimizing the Vega risk of outright call options. The problem is the lack of flexibility they create in terms of market timing. The extrinsic value of the sold upper call can wipe out much of any intrinsic value of the bought lower call until time decay really kicks in as maturity approaches. As such, a correct call on the direction of the underlying share price does not hold true unless it continues to be the case at or close to maturity. Do you guys have a rule of thumb around your approach to maturity and strike selection on call debit spreads? Thanks a lot. P.S. As an incentive to Lena to take my question, I've attached a picture of my schnoodle hanging out with my girlfriend's cat while listening to the Market Huddle. The cat pays more attention than the dog, but the dog is better at calculus.
Nice.
I like it. Now, this is a really good question, actually.
Yeah. So the first observation, which he's right about, is that once you create a spread, one of the biggest mistakes that beginners do is looking at the payoff profile at maturity when calculating the trade to look at their risk-reward propositions, because spreads only really pay off held to maturity. And so so if you're from a market timing perspective saying, if the stock goes up and then it's there, I'm going to take my profits, but you still have a month or two until its expiry, you're not going to get the full payoff. And so once you get into spread trading, getting the time frame within the right window of which that price will be there is actually quite important. And it's always important to try to put on a call spread or a put spread with a better than 2-to-1 payoff profile, because often you're only moving at the net delta of the two positions, because you're long delta on one, short delta on the long gamma on one, short gamma on the other. You're long volatility on one, short volatility on the other. It's a very neutralized thing, and so the spread is moving only at the net differential of the two options, and so the rate of change of the whole spread, it goes much slower, and so you have to take into consideration all of those things when sizing your trade and deciding what are the right strikes to choose and what you're willing to take profits early on. This is why often opening one that has a better than a 3 or 4-to-1 payoff is important, because when you're getting into that target zone, you want to be better than a double when you're taking profits quickly. Is just my little insight. You have something to add to that, Kev?
I got nothing to add. You sounded like you really knew what you were talking about there. It's almost like you do that for a living.
All right. Anyway, that's my little insights. You have to the biggest thing in general is that when you're just buying gamma to the upside and you go outright, you're fighting volatility, you're fighting time decay, but you have all of the upside when that kicks in, and all that right tail or left tail, depending on whether it's a call or a put. While once you get into spreads or any option combination, butterflies or anything like that, the timing of your expiry is actually a very important component of hitting max profitability. And so you add another variable into the equation. Anyway, that's my 2 cents. Lena, let's move on.
All right. Second question of the week. Hey everyone, I'm a longtime listener, first-time writer. As much as I wish I could kick back and listen to the Huddle each week with a bucket of sessionable beers within reach, the reality is that I usually get my Huddle in at 6 a.m. on Sunday as I walk around the neighborhood pushing a stroller in one hand and holding a dog leash in the other. Nonetheless, the Huddle is the best party I attend to each week, and in times like these, you've got to take what you can get. Anyway, I've recently started to dabble in the OTC markets, specifically with some of the grayscale products like Bitcoin and Ethereum. I pay good money to get real-time OTC quotes, but I regularly try to hit a displayed bid or offer that does not fill. I know it's not just me because I will often see the best bid higher than the best offer, and sometimes over a minute will tick by before they get filled. I've tried asking my broker and a number of people who I thought would have known the answer, but I can't seem to get to the bottom of it. Any chance you guys could help me understand what on earth is going on in this wild world, which is the OTC markets? Thanks for all you do, and I'll see you at the piss up.
Nice. That's nice. 2 in a row. They're like promising to come to the piss up is how you get a question answered. No, I'm just kidding. I'm going to take this one, Patrick.
Right.
So Grayscale trades on the pink sheets, and I think it's the pink sheets. And the pink sheets are the Wild West. There are no rules there. It is kind of just I don't even know. Sometimes it's parts of it aren't even electronic. They're literally phoning each other. I don't know exactly how it works, except to say that the reason that you're not getting fills is because there's no rules guaranteeing that you will get fills. And if there's no rules guaranteeing that you will get fills, that means that there'll be somebody on the other side that will probably keep your order in hand or do stuff that's a little bit on the nefarious side to try to make as much as they can out of it. And the reality is that that's one of the reasons that people don't like trading stuff on the pink sheets.
Or the OTC, any over-the-counter market.
And it's not like I wish I could give you an answer that you should go trade on this and it'll all be fixed. There is no answer like that. We're the same way. Like when we go put in, like we often, when we see a pink sheets, we'll just stop thinking about it. We'll just be like, nope. You know, it'll be something that we won't trade because we realize that there's other traders that are holding a much better hand and it's not a level playing field. And if it's not a level playing field, then, you know, yes, it's fine for an investment. You come in there, you take it, and you go. But the reality is that if you're trying to trade it in and out, you're going to get hooped. Is the long and short of it. And if you do want to, by the way, if you do want to trade these, there are now more ETFs and there are more Bitcoin alternative products. It's not just the Grayscale.
Yeah.
And I'll just, you know, here in Canada, we made up our first Bitcoin ETF. And the interesting thing about it is that there's no premium. It trades right on the quote. It's $8.92. It's BTCC.B. And it was trading 20, 30 million shares a day for a while. It's traded, I'm pulling up right now, it traded 4 million today. But it's, it's a penny wide, 891 into 92. It's 4 by 5,000 offered, and you get what if you go to take something, it's there. And you also don't have the problems of trading with the problems with the OTC markets not honoring your fills. So anyways, sorry we couldn't answer your question in terms of a specific answer, except to say that it's not out of the realm of what everyone else is experiencing, and you shouldn't expect any less.
But they were expecting a stupid answer, so it's no problem.
Yeah,
you're off the hook.
Yeah.
All right, Lena. Let's move on.
Last question of the week. Hey guys, been seeing a lot of chatter about ARC liquidity issues if they see increased outflows due to their large positions in smaller or illiquid names. Is this actually an issue for an ETF? I know for mutual funds this would certainly be a problem, but my understanding is that as an ETF, they can trade at a steep discount or premium to NAV. Also, in a scenario where they see big and consistent selling pressure, which would lead to outflows, are they required to take back creation units or ETF shares from market makers or APs? My understanding in this scenario would be that they'd need to deliver a basket of shares to the AP in an in-kind redemption for shares of the ETF, not sell the illiquid names directly out into the open market for cash. Is the risk that the AP don't want to take on the illiquid shares? Are people misunderstanding the difference between fund structure between an ETF and mutual fund? Or are people just finding another reason to bash Kathy? This is where I start getting a bit confused. Appreciate your thoughts as always.
Okay, I'm going to take this one again, Patrick. A couple of things. First of all, ETFs should theoretically not trade at premiums or discounts to NAV. And the reason they shouldn't is because the market maker or the approved participant, the AP, is obligated to stand in there and make markets around NAV, and they buy and create units based upon the flows from the marketplace. Now, there have been times, like during COVID, when certain ETFs have gone to big discounts, and it was because the APs were not able to actually execute those things. But those are very, very rare, and it had more to do with the fact that there was just, like I remember in COVID, there was trouble with Morgan Stanley. I remember hearing that like half of the ETF desk had gotten COVID and were out. And, they would come in and then they'd be gone again. And so there just wasn't the staffing to do it. At the time, I was pushing for everyone. We're putting people at risk to keep this exchange open. We should close these things and just take a break and get everyone settled at home so that we can make markets. But people wanted to trade it. And so they kept trading. And I remember there was some very famous instances of some of these bonds, like the high yield bonds, trading at absolute monster discounts to NAVs. That theoretically shouldn't have happened. And I wouldn't count on it happening with Kathy. Now, I'm not sure in terms of this ARC ETF, because it is technically an active fund, I believe. It is not an index fund. I'm not exactly sure how it works, but let's just assume that Kathy Wood, the portfolio manager for this ARC investment ETF, sets a portfolio of shares that the approved market participant knows about. And because they know about the portfolio, when it goes to a discount, they will buy the ETF and short those names. At the same time, if the ARC ETF goes to a premium, they will short the ETF and buy those names. What will happen is they'll go back and forth, and when a position gets large enough, they will just ask ARC to either create or redeem the appropriate amounts of ETFs to flatten their position. So I don't buy the argument that there's going to be people putting on, in terms of the ETF, putting on positions where they're not selling the little names. And I have seen the same kind of highlights that you've seen. I think that what those people are talking about is if ARC starts to get a lot of outflows, and it's not just the ETFs. Don't forget they're also a fund management company, and there's all sorts of things that they have. But if they start to get a lot of outflows, they might choose to not sell the very illiquid names because they're gone, no bid, and they can't sell.
They'll sell down Tesla, right?
Yeah. But don't forget that the approved participant will know that and will have the ability to make the proper basket to create or redeem proper baskets as defined by the ARC portfolio manager. So the long and short of it is that you don't need to worry too much about the ETF portion of it. I don't think that's going to be where there's a dislocation. What will happen is if we get a situation where we get a bunch of selling in this company's funds, that they might naturally themselves sell what they can, not what they should. And that's a completely different ball of wax. But I think there's a lot of moving parts in there. I think that there's a lot of people talking about the fact that because it's so transparent, they know her positions and they can shoot against them. And there's a lot of people trying to game it. I would just say that I wouldn't worry, me personally, I wouldn't worry about the ETF coming unglued against the NAV of the actual portfolio. And I would feel comfortable that it's actually going to follow it. That's my 2 cents.
All right. Makes sense. All right, Lena, why don't you let all our listeners know where they can submit their questions?
So if you have any questions for Kevin or Patrick, submit your questions to nostupidquestions@markethuddle.com.
Oh, there you go. And by the way, if you want your question answered, it increases your probability by attacking on one of the symptoms for our beginning
Yeah, that's right. We
piece.
do need that.
We need more of the symptoms for our disclaimer at the beginning. So if you include one of those with your question, increases the probability that we will feature your
And if you
question.
make a good WTF, we will for sure answer your question. Okay, thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle on Twitter. We're there every single day. Give Lena a shout out. She gets tired of talking to Patrick and myself. You can listen to the Market Huddle on all the networks: Google Podcast, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to our latest content. Smash that bell or whatever it is. Please rate and review us on iTunes. You know why. And Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna, or you can visit me at bigpicturetrading.com, where I have a free trial. Unlike you, Kev,
I'm hardcore.
You're hardcore behind the paywall. But where can they find your letter? Since Jim gave you such a glowing,
he's too kind.
Yeah,
it's at Kevin Muir on Twitter, or you can check out my newsletter at themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
nice.
It's been a while since we've been all able to do the same beer. This is going to be fun.
Yeah.
So let's do the beer to start with.
All right.
I wish I knew what I had rated this last time, because I'm going to embarrass myself. I'm going to show I'm a true amateur. I'll probably be off by like a full one or two big figures. I'm
but
thinking.
your palate changes though, right?
Oh my God.
Yeah, I don't think
That's exactly it. His palate has
my
evolved.
My sophisticated beer palate has changed.
Yeah.
I don't think so.
Because Labatt Saint-Con there is tastes worse or better now that your palate has evolved.
That's like
It only
water
tastes
for
better.
Kevin.
The Bat Saint-God only gets better. Okay, I'm giving this a solid 8-2.
Oh no,
Nice.
that's what I was gonna give it.
Oh, well, you can do it. You can just,
Yeah.
Go ahead,
Yeah,
Ashley.
I give it a
your
8.2
score is your
as
score.
Well. It's a good beer.
yeah. Patrick?
Well, I can't get over the crusty bread taste inside
Well,
my
it
mouth.
sounds
No.
better than yeasty, right? Like saying yeasty
I like crusty
beer.
bread.
Sounds
I like
better
it.
to have crusty bread.
Like a crouton, just like it's
or like a
I'm
baguette, like a fresh baguette.
No, you know what? I'm a big fan of the Junction Craft Brewery. They're actually up my street, and so I've actually gone for pints in their little thing before COVID.
Oh, and they
but,
deliver.
And they deliver.
That's how
which
you
is-
got it
which is
today.
fun.
'Cause
Yeah,
Patrick's in lockdown.
It's in
So,
I'm in full quarantine over here, but so they delivered the beer. So I who am I to? I have to score it high because it's not only good tasting beer, but I have a bias. I'm gonna go 8.3 just to top you pieces of shit.
I thought you were
That's
gonna
the
go much
benefit.
higher
That's
when
the
you said
benefit.
Going
That's
last.
the benefit of being.
That's our closest clustering ever.
that. Well, if you live in the GTA, you gotta check this.
It's a pilsner. How do you not cluster with a pilsner? It's just not like one of these crazy IPAs that we've been drinking.
The crusty bread, though.
It's,
I feel.
I don't
bloated
really
just by
understand.
listening.
Do you ever get those people? Maybe this is. We'll see. I was right about the raisins. We'll see if I'm right about the toast. Lena,
Yes.
like when you make toast,
Yes.
where do you make it? Like how? Like what? How? Like if it burns a little bit, is that terrible?
Well, it depends on the
Yeah.
varying degrees of burntness, I guess.
But
it's
if it was just
black,
kind of like just
wow.
barely brown, would you be like, "Oh, that's good"?
It depends on the bread, I think.
Oh, okay. So you're a
yeah,
little
for
more
me, it
sophisticated.
depends on the bread.
okay, so we're talking Mungie Cake white bread. We're talking Wonder Bread in a toaster.
Okay, so it would have to be. It would have to have the same color, almost the same color as the actual crust. That to me is a perfect toast.
Oh, okay. How about you,
white,
Patrick?
On white bread, right?
I'm the least pickiest fuck when it comes to to toasting. Like I'll eat it almost fresh.
Carbohydrates.
To like,
I don't care.
Yeah.
Yeah, throw it over the fire.
Well, what's more important is what you put on it. You cake it on with some
See,
peanut butter. Or
I don't know. I don't know if it's like I guess I'm Scottish and I feel like we like all of our things burnt. I personally.
You like crispy?
Oh Jesus! I like would toast it and then leave it for a day and eat
So like you take one bite and the rest of the thing just crumbles in
You
your
like
hand,
croutons.
just like it.
That's what you like, croutons.
Yeah, like a
Yeah,
crouton.
I want.
I think it's terrible. You go to Tim Hortons and you order a sandwich and you're like, this is toasted?
Oh, no. But at Tim Hortons, you got to always ask for double toasted.
Double toasted. I go triple if I could. Like, I'd leave that in
Can
there.
you just burn it for me, please?
Exactly. You know, I used to have times they go and they would be like, oh, look, we burned it a little. And I'd be like, that's fine. What's wrong? It's a little burnt.
No, at Tim Hortons, I will always ask for double toasted.
Okay, well there we go. So my
They're
raisin theory
toasting-
did not hold water on the toasting. So Lena, give us a dog update because we're not going to have them for long. So we got to keep it right because you're going to.
Yeah, they're going to start going to their permanent home starting next weekend.
Oh,
So one more week with them. And
So give us an update. How is everyone doing?
Well, they started eating solid foods, so that means solid poops. It's been easier to clean, so that's the upside.
Lena, I can attest to this personally. That's not always the case.
What do you mean? Solid poops easy to clean? Wow.
No,
for these
solid
puppies.
poop. Solid food means solid poop.
Oh yeah, no. We've been pretty lucky. They haven't had any complications. They haven't had any, weird diarrhea situations.
Okay.
So
Anyways, we should talk about something else. It's a bad joke. People humor never good on Friday night. So when are you decided which one you kept, or are you just gonna keep it to like last moment?
I think we're gonna wait until the last moment because I feel like it changes every day.
Oh.
But we're happy to keep any of them, obviously, and we're gonna miss them very much. So I'm trying to spend as much time with them.
Are you letting the other people choose the three?
Don't get emotionally attached to them.
I
This is
already
the.
am.
Lena, are you letting the people choose the three, and then you're just gonna take whatever they don't want?
No, it's up to us to choose.
Oh, you got
our
first. You
pick
got first
first.
rounds.
Yeah, because since we
No,
took
that's
care of
even
them.
harder. That's harder.
Sophie's choice.
Sophie's choice.
I don't know which one. No,
I would take the run. I would take the run to the litter. I would
Well,
basically
but
say
that's
let
kind of
everyone
what
else
we're
pick. And
leaning towards. We actually were thinking of keeping the run because she's the smallest and she's been showing a lot of personality and we really enjoy her. So we are leaning towards keeping her over the other dogs, but we'll see. We'll see what happens. We'll keep
Patrick and I both have a fair bit of kids and showing a lot of personality. I think you should just get rid of those ones. Just kidding. We all love her.
Actually, I know what you mean. Now that I think about it, maybe we have to keep the quiet one instead.
Oh, well, Patrick, what does it feel like to be home?
How was shoveling
No
your
comment.
driveway?
no comment. No comment. This is.
No, you're home.
This
You're
is the
doing your
worst.
thing.
This is the worst.
You're doing your thing. I know you. You're following the rules. You're staying at home.
Yeah, it sucks. It really sucks. But actually, there's benefit. I've been in full detox and like it's
So your first.
This
my
is the
liver
first
this is my first beer in 7 days. So like my liver is like starting to heal.
Starting to heal.
Starting
so
to heal.
what day are you now? You're like 4 or 5 days. Well, how long have you been home?
Since Sunday. So yeah, it's been 5
so
days.
Just over a week more to go.
It's not that bad.
Yeah. Cuppy broke my liver, so now it's well, we'll talk about when Cuppy's on the show.
But it beats staying at a hotel.
Yeah.
So.
Yeah, listen, it could be worse. Like you snuck under the wire, obviously.
Yeah, I literally came in like 4 hours before the fucking.
Did you hear
hotel
there's a whole bunch of people in Canada? So for those who don't know, Canada has made a rule that once you come from out of country, you need to go to a hotel and get a
Till-
test.
till your first
traveler's
COVID.
expense.
Yeah, and stay there. And good old Canada, people are just getting off the plane and just getting and driving home. And they're like, we don't have anyone to stop them. So literally, we make a rule, and people are just like, screw it.
I think there.
No,
I think I
but-
read an article saying that there was like 30 plus tickets that were issued for people that denied the test and decided to just go home instead of going to the hotel to
yeah,
quarantine.
it's probably one of those
whatever,
things.
so.
Yeah, it's like 80.
$750.
So $750 for a ticket, or you can spend $2,000 on a
Exactly.
hotel.
So-
Like, give me the fucking ticket.
Yeah.
Like if I knew that, I would have.
No, you would have done the right thing. You would have gone to the
No, I would not have. I would not have. That's not the right thing.
Sure, it is. You should go to the hotel and do it
I-
properly. Anyways, we better not talk about this because you know what?
You're gonna get me all wound up.
Whatever, people will be upset, but I've been pissed off at Canada because we've.
Look, I haven't come in contact with anybody. I'm following the rules. I don't see what this so special about a hotel that's going to make me follow the rules.
No, I agree with you. If everyone did what they were supposed to, you're absolutely correct that the rules that were previously in place would be fine. But as the premier said, like they had the cell phone data, they looked around. People were not following the rules. Like they just weren't. They were coming home, flying home, and they were just going about their lives. So yeah, I 100% agree with you. I trust you. I know you're going to do the right thing. But there's a whole bunch of people that are not doing the right thing.
And those people are the ones that are taking the ticket and going home and not following the rules anyway.
They're ruining it for all of us. I completely agree. It's like when you're all in line in the car.
All right, let's talk something more
in the car, and some asshole just goes to the front of the line and butts in. It's basically the same thing. But anyways, let's talk about something more fun. You know what's funny, Lena? Did you hear Patrick? He said, like, I listened to the show last week on the plane ride home, and I now have a new appreciation for listeners that can stand to stay for the whole thing.
Yeah.
He said, do you realize your after show was half an hour? And I was like, are you kidding? I thought it felt like 10 minutes. I was just talking to Lena.
When I was editing it.
I didn't realize it was half an hour.
Yeah, it was.
Yeah,
I listened to it.
Time flies.
I couldn't. I had to fast forward through the parts where we pre-recorded the show.
But the rest of you can't listen to yourself. That's
the worst.
Or maybe you should.
No. Oh, shut up, Lena.
I just let Lena tell me what I do wrong. Lena tells us she's very brutal. We say, tell us the honest truth.
No. I tell her to lie to me because she only tells the honest truth. It's the worst.
Stop telling me how bad I am.
Stop it. Just lie.
Oh, that's funny. Yeah. So Lena, on other shows, when Patrick's cheating on me, those are a little more edited. So Lena has more work. And then
just a little bit.
So when I go on that show, I always ask her. I said, "Oh, so what did you have to take out for me?"
I said, "Not much."
Yeah, but I don't want to say because then everyone's going to listen for it. Because you know what happens if you listen for somebody's like filler word and then you know it. So Lena, honestly, don't say it. Because if you listen for it, then all of a sudden you'll hear it all the time.
And that's all you're going to hear.
Exactly. There was a very when I started doing this, there's a very nice guy that runs a podcast. I'm not going to say his name. Super nice guy. I really love him, but he does a lot of filler word. And once I started listening for it, I was like, oh my gosh, I can't stop listening for it. And it actually made it worse.
Was it Patrick?
Yeah.
You guys are so mean.
Hey, by the way, did Eric say something about me? Because people are telling me that something about in the beginning of today's show or yesterday's show.
There was a mention. Yeah. Yes.
Oh, yeah. Okay. I hope it was good.
I don't think it was
bad. No, it was not good. You would have to actually listen to that show, but.
Oh gosh. Okay, so do you have any TV shows, Lena?
No, I have nothing.
Nothing?
I have nothing.
Patrick, do you have something? You've been sitting at home. Like, what have you been doing?
No, I don't watch TV. I don't like it.
Why? What is it that you don't like about TV? Not that you should like it, but what is it that you don't like?
I don't know. I just I'm too busy with other things that I don't feel like just sitting down and watching stuff. Plus,
but isn't that what you're doing with the markets? You're sitting there and watching the markets all day.
Yeah, but I have real skin in the game there. Like you're an active. Yeah, you're a real participant in there. It's a lot different. But you know, I think I just need to find a show. Because it's like, I look, Loudermilk is all right.
All right. Did you honestly say that Loudermilk is all right?
Well, listen, it didn't stick on me that I got past 6 episodes.
My God, really?
Yeah, and so, but it was good. I'm actually not shitting on it. Something needs to grab me. The last
I know the last thing that grabbed you was UHF when you were 12 or whatever. But
oh my God.
Get it. Everything's been a disappointment since UHF.
Ever since it's been a disappointment ever since. No, but like like if the next kind of Game of Thrones or something that catches me that basically
Did you
gets
actually
me
finish
glued.
Game of Thrones?
Oh yeah.
What was the hook for you for the Game of Thrones?
The naked women.
I was gonna say nudity.
Oh my God.
It's HBO. So
Is it really?
The thing about Game of Thrones, when I used to I was a little late to Game of Thrones. I wasn't on, and I kind of I was midway, I guess, or maybe not midway, a third of the way in, and I was just shocked at how they kill off characters. You're like, oh, you're just getting to know someone, getting into boom, he's gone.
You know what? I actually luckily made it to Ned Stark being beheaded, and the moment he did, I was hooked. Because I honestly thought I thought he was one of the main characters, and he was going to the end, and he's done, and I'm like, this is fucking awesome. This is awesome. I'm hooked. What the hell? Where are they going with this? Right?
Definitely keeps you on your toes, right?
Yeah, nothing killing off the main star actor real early.
Yeah. And you're like, wait a minute, what's gonna happen? How are they gonna carry on with the show? But
yeah, it's anyway.
That's funny. That's
I'm also like the I'm in the 1% group that actually liked the final season. And how many people throw hate at me for that? How many people actually?
I think people are just glad that you actually watched the show.
The final season's is terrible.
I loved it. I loved it.
Did you?
I loved it, and this is what I'm saying. I'm the 1%, and then watch, we're gonna get a whole bunch of people that is gonna, it's like saying I'm a no coiner. The response is pretty.
By the way, I am still getting hate mail about the BSV guy.
Oh,
I can't believe it. I'm just I finally said to some guy the other day, someone he tweeted something, and I was like, listen, you think I had an opinion about BSV? First of all, I'm a no coiner, you know that. I think it's all bits in the sky. So to me, it's irrelevant. I try when our guests get on the show, I try to help them tell a story, and that's it. And I said, you know what? He had a story to tell. I tried to get him to help him tell it. Next week we got a coiner, a regular coiner on, and I tried to get him to tell the story about why BSV wasn't good. But I'm just shocked at how offended people were about this guy. It's flabbergasting. Don't you think our hate mail in terms of that one, in terms of how much they got offended?
I have a hard time filtering all my hate mail to categorize. I haven't run the stats on that. Well. I need to program some algo or something to kind of pick up keywords. I don't. As people know, I don't care. I thought it was an interesting story, so we had him on. But people got very offended, and I think it was all this thing about him claiming he's Satoshi or Yakamoto or whatever the guy's name is. They get offended. The way I look at it, though, Patrick, this is what the difference is. If you think about it, Scientology. Okay, you walk by. And they can tell you're not interested in Scientology. They leave you alone. But if you were a former Scientologist that leaves, that's big problems.
Oh, yeah.
Yeah. So it's almost like that guy was part of it and then left, and then that's what really pissed them off. Now, we're probably going to get tons of hate mail about why.
Oh, yeah.
I probably
hate mail about hate
yeah.
mail. So then we'll have a hate mail about the hate mail about the hate mail.
I just want to be clear. I don't know about BSV. I don't really care. I try to get our guests to help them tell the story.
Now they hate you that much more.
They tell the story.
Hate. Yeah, you should know.
On the show do not reflect of. The
yeah.
Oh, we should have the Lena
Patrick.
disclaimer.
That's right.
That's what we got to include, I think.
And if you were looking, I told this guy, I said, if you're looking for a gotcha show that's where we're going to argue with our guests, pick another show. I'm not. You know what? If I had to get along, believe in everything our guest says, I would have got rid of Patrick years ago. And not only that, I told this guy, I said, you hate BSV, go short it. I don't hate people because they like a stock. I'm oh God, you like Tesla. You know what? I can't talk to you. I don't care. I'm glad you're there so I have a bid to hit. That's all I can say. I just think people are hilarious and they treat positions like religions, and I don't. They're just positions to me. And that's I guess
And when your opinion changes, your position
like
changes. It's like
I hate Tesla right here, but at a certain price I'll like it. And there's someone, I think Jim Grant once said, there's no bad bonds, there's just bad prices, and that's how I feel about everything. There's no bad assets, there's just bad prices. Anyway, so please don't send me a diatribe about why the guy was so wrong. I get it.
Oh, because you mentioned it, they will be.
Yeah. Well, I get it. You guys think he's wrong. Listen. I have a stack of them. I keep them, not like Patrick.
No, I archive them. Okay. I'll eventually read the hate mail, but
nobody beats the guy who phoned me up and left a death threat though for my MMT views.
Oh wow.
Well, that's awesome.
How did they get your phone number?
I have not had one of those. Now you're a whole level category higher than I am.
You didn't say because you you're part of the ZH crowd. Like usually you're like on the same wavelength as them. Shorting markets, fiat currency going to zero, all this stuff, and so they like you. But then when you go and say, hey, and the funny thing about it was at the time, this was early on. All they was saying about MMT was, this is coming. Be ready for it. It wasn't even like I was very...
You're going to die. Exactly. You're going to die, Kevin.
They hate the bearer of the bad news.
Anyways, oh well. Okay, that's it. On it. Well, let's pick some...
Yeah.
Or should we pick something nicer to leave it on?
Yeah.
Yeah. Lena, you pick your topic.
I've got nothing.
Lena, you're going.
I've got nothing. What are you talking about?
Come on, Lena. You got to have something. What's your wedding situation?
Oh my gosh, I haven't even thought about it actually.
You've been too busy with the dogs and the work.
Well, I was never like most women. I think from what I've gathered, a lot of women like to have big weddings, and it's the dream wedding and whatnot. I can't do it. It's not me. I just want to sign papers and be done with it.
Oh,
I have no
you should do that.
But that's what we're gonna do.
My God, Luke is the luckiest motherfucker in the world.
I'm like, I don't need a big venue. I don't want to invite 100, 200 people. Like, we don't even know that many people.
You know what you should do, Lena? Do like my wife and I. We figured out how much we were going to spend on our wedding.
And then went on vacation.
We blew it on a cruise.
Yeah, I think you mentioned it.
Yeah, so you should just do that.
Why don't you guys just have a wedding at the Huddle Piss Up?
There you go. Now, Patrick, you got a good idea going on there.
Oh,
and
my
do you know
wedding
what?
will be sponsored by
I am a
Market
minister.
Huddle.
Listen, I am a minister of the Church of the Flying Spaghetti Monster. I don't know if anyone of you guys know about this.
So you can wed them?
Yeah, of the Flying Spaghetti Monster. You guys know about the Church of the Flying Spaghetti Monster?
Yeah, I do. I do. I've heard of them.
I'm a minister there, and so I can wed you.
Can you really? Is this for real? I'm so.
Well, I am.
Right now.
I'm a minister there. I don't know if I'm allowed to wed you.
I mean, we gotta go look at the fine print.
Yeah.
I'm not sure. You could always go to City Hall the next day. I could just wed you in principle. I need to wear a colander on my head though while I'm doing it.
Oh, that. Okay.
Yeah.
Now I get it. I see. Do we have to also wear a colander?
No. It's just a minister.
Oh.
It's only
Yeah.
Do you wear it backwards or forwards, or how do you do a two-handle colander, or is that a one-handle colander?
I think I'd use a two-handle. I've never
occasion.
married someone.
No, because you gotta have you have the two ear things on either side. It's important.
Yeah. So.
But does something stick out from it, or you just have to wear it straight up?
I don't know, but so I'm
you could decorate it up.
Putting it out there.
Okay, maybe we'll have an outdoor wedding and you'll get a tan line of the colander on your head.
Nice, and with my baldness, so it'll be all these little white,
these little red dots.
Red dots on my head. Okay, that's a better thing to leave.
All right.
Have a great night, everyone. Thanks for tuning in.
Yeah. Thanks, everyone. Cheers.